Given what we heard from Meta, the earnings miss, are you reevaluating your exposure to technology?
Yeah, so I didn't really consider Meta to be a bellwether in the tech sector so much anymore. The whole FANG name had kind of gone by the wayside as they started to shed quite a bit of market share with this commitment to the metaverse. But I have been very surprised by the market's willingness to shrug off bad news overall, right? After we got earnings reports from the banks and they started to report misses on profits, I was certain that the news from Jamie Dimon about a hurricane coming and everything else was going to send the markets in the other direction. And then, especially once Microsoft and Google showed that there was weakness in the tech sector, to your point, I thought it would send ripples across other companies reporting after them. But we've seen the opposite, which makes me wonder if it's possible that we've reached peak pessimism, like you said earlier, at this point in the markets, just because of its willingness to shrug off all bad news so far.
And two key reports we'll get today, Apple and Caterpillar, both will give us a good read on what's happening in China, Malcolm.
Yeah, I think that it will be important, especially for Apple, to find out how much of an impact China is having. But frankly, I'm looking more at Apple and Amazon. Apple I own personally, Amazon I don't. But I'm looking at those two because I think they're going to tell us a good bit about the consumer, for one. And then also, again, to the point about the tech sector, you guys reported earlier this week that Amazon was going to be freezing hiring in its AWS, Amazon Web Services business unit. And the public cloud has been the thing carrying the water for all of Amazon. It's what allows their e-commerce section of the business to survive and keep on going. And so if they're telling us, the dominant player in the public cloud space is telling us that the market for that business is drying up, or at least showing some weakness, I think that's going to be very telling for the whole mega cap tech trend and trade altogether. You couple that with Apple telling us whether demand for the iPhone, which is now more of a durable good or a utility than it is a luxury item. I think those two things together are going to tell us a ton more about the tech sector altogether. And I don't think that the market is going to be able to continue to shrug this off and we end the week the same way we started it. But time will tell.
Yeah, and at the same time, we'll be getting U.S. GDP. Malcolm, if that report suggests the U.S. economy is not in a recession, how do you expect the market to respond?
I think that'll be very surprising. I think that'll be encouraging once again to the markets, as far as good news that tells it that we have reached that bottom already that we've all been looking for. I think that finding out that we're not in a recession here. However, we had the recession we were looking for earlier this year, frankly, technically. I think that will be a signal to the markets that although the doom and gloom is still out there and the attitude is pessimistic, it's probably at that darkest before the storm kind of spot where we're turning the corner and we just can't feel it yet because the economy tends to lag a few months behind what the stock market does.
Just quickly, the Dow is up 10% in the month of October. Have you been buying into this mini rally?
Not yet. I assumed, honestly, that this was going to be the time to buy when Q3 earnings came out and started to show weakness. I thought that the markets, for sure, coming into this week would be in the opposite direction. And I'm really surprised at the market's durability, I guess is the word to use, or just willingness to say, I hear you, but I still think it's time to buy. That has been very surprising for me as an investor. And we haven't been encouraging clients to go and make any trades just yet, simply because we did not expect to see the markets respond this way.